through the bracket and comes back into the bracket, if you buy into that bracket there, it should trade to the high of the bracket. Okay, that's it. That's as simple as it gets. If the price breaks above a bracket, it comes back down, and buyers come back in, that's it, busted. It's not rejected the high of the bracket. So you can see at the bottom edge here, we can see that this is a bottom edge. We can see some selling coming in. It's not ideal, but when it does go back inside value without really building any value lower, and when we're talking about building value, we're really talking about prices kind of building into sells more than just a single sell print, but we're talking about sellers coming in this kind of area here. They didn't really do that. They tried to hold it here, but they lost it. And if it goes through above that level there, guys, you're probably expecting the price to go all the way through the top edge. It goes through all the way through the top edge, and there's not a single buyer up here, is there? It doesn't have any new initiated buyers up here. It seems to just be a big sweep of stops and then a reversal. If it sweeps that stop and reverses, this should trade all the way back to the bracket low 80% of the time, according to the profile. So we can already start to look at that and say, well, that's the profile. There's the break back inside the profile there. So this should trade all the way back towards the low price. And that allows you to maybe start working maybe some offers into that phase there. And you get this very, very nice break back down to the low price. This is what's called building value below here. An attempt to buy it, reversed out, and that's it. That bracket is now finished. That's the bracket finished. So one of the things that we have an idea about is just looking at what happens when you go outside a bracket. Having an idea of going outside the bracket itself. Because when we go outside the bracket, of course, there's a lot of things that can happen. The big question is, why did it go outside the bracket, which these guys don't spend any time understanding. Because there's got to be a reason why buyers would want to pay this price or sellers would want to pay this price. So these guys don't touch on that because it's not part of the technical studies, which obviously makes it false. It makes it all wrong as far as I'm concerned. But it's still a nice way to think about the marketplace. Still a nice way to consider what's going on when price makes a move. Because if you get a break above a market and then no buyers show up, you've got to try and understand why is that the case. Why do no more buyers show up above that value? Because it doesn't seem to be value for them. It seems as if it's been a widening process to try and maybe sweep into some stops, bring in some liquidities. And that's the reason why we start to recognize things like what we call the interns trade, the Heisman trade, right? Because effectively that's what the Heisman trade is. A rejection of a higher price or a lower price, and it goes back inside the value. So the Heisman trade is the 80% rule. So it kind of starts to make a little bit of sense, doesn't it? All good? All good.